And so it is 8 o'clock on Friday, and we are here again to spend a few minutes with you. It was an interesting week. I was reminded of a class I took in college, and I was kind of a late bloomer. I went to college late in life, but professor had computers set up, and we designed companies. And then every day, it was a Saturday class, around about 3.5 hours. And then he'd come in and give us kind of throw curves into our business plans. And so it was really interesting because we were learning from the book, but we also had to design a company, and then he would throw real life issues in there. And they were everything from the price of steel went up, labor contract issues, delivery issues, weather issues. I mean, he'd throw something at us every Saturday morning. It was always kind of interesting because you never knew what to expect. And it was a really good exercise because that's kind of what business is all about, is it's about managing the surprises. So as one of the things we've talked about the last couple of months here is getting ready for the market, the things that we see in the future, not as much hurdles as sometimes obstacles. And then last Friday comes along, we leave the office and get home and find out that Justice Ginsburg had passed away. And oddly, that's really important right now for economics and for the business cycle of the country. It is changing the dynamics of the election. It's going to be a factor, and it's not something we were prepared for. So it's something we're kind of adjusting, taking a look at, see what's coming. And it is changing things, and it's making as volatile as we thought it would be before the election. This has a potential to make it more volatile. One of the most interesting things to me has always been the number of people that cast ballots in an election. The last time we had over 70% of eligible voters cast a ballot was, I got to look at my notes here. It was 1900 was the last time we had more than 70% of eligible voters vote. In 1968, we had 60.7%, and since then it's declined to where 2016, right about 55% of eligible voters cast a vote in the election. I think that's probably going to be the biggest impact the death of Justice Ginsburg has. It probably will, I mean, my hope is it'll cause more people to go out and cast their ballots one way or the other. It's just important that we vote. And so I think that's going to be a big effect. And then, of course, the nominee for replacement, that also could spark some interest. So I think the biggest impact will be how many people actually go out and vote. And that can never be a bad thing, more people voting. So that's happened since we last met. Japan's got their new Prime Minister, Shahidi Suga. He's 71 years old. He's from the same party as Prime Minister Abe. So that's been a little bit seamless. And he started making his contacts around the world yesterday. And all the reports are good. He's people like him. He's kind of a soft-spoken guy. He's not really highly. He's not coming in here with a huge educational pedigree, but he's a very wise government person. So I think he'll be a good choice. So let's go on into, well, let's talk about yesterday a little bit. Yesterday, the market was unbelievably interesting. We were up and down. We were all over the place. We were down 150. We were up 350, and we ended up being almost flat for the day. That's the volatility that we've talked about and some that we expect to see for the next couple of months. So we need to be prepared. Those days make me a little uncomfortable. As I've said before, I like to see 40, 50 points a day. That's pretty quiet. But when we start seeing 3-digit swings, I get a little bit nervous. But so that's something we need to keep an eye on. Today, we're looking at probably another decline. And so let's, Mallory, if we could go into the Dow Jones chart and talk about what I'm seeing. And one of the things that we've talked about is this recovery. And honestly, this recovery has been weak. It did come back pretty quick, but the weakness starts appearing right back here about, I don't know, 2/3 of the way across the screen, right about where Mallory just was. And then what you're seeing more recently is that dip down. So you're seeing the daily dip down, the 7-day moving average coming down, the 14-day moving average coming down. And those are indicators of somewhat alarming because now it depends what happens next. I'm expecting today to be down, but I expected a lot of things yesterday and none of those came true. So we can always say what we think is going to happen. We can say what should happen. But at the end of the day, the only thing we really know for sure is the market's going to fluctuate. And yesterday was a great example. The market fluctuated with the best of them. So we'll wait to see what happens. This drop over here on the far right-hand side that you're seeing may be the beginning of what I've talked about for a while, which was a decline in the market in the fall. I was saying October, November period. And, that may be what I'm seeing. We'll have to take a look and see what happens. Not today, but more like next Wednesday, Thursday. We'll talk again a week from today and see how we're doing. The next chart is our unemployment filings, and those actually ticked up a little bit. They ticked up about 6,000. There were 806,000, I think the number was. And so that's causing a little bit of an uptick. The problem there is I truly expect that to go up again next week. I anticipate it will go up the following week, and it will probably go up the week after that. We're going into the period where we know that we're going to see somewhere around 35 to 50,000 layoffs in the travel and leisure market. What I'm hoping is that'll be offset by hiring with Amazon, FedEx, UPS. They're going to start doing seasonal hiring here pretty quick. So I'm hoping those two offset each other. The Amazon number was extremely high on what they expect to hire, and that's really good. And that could cause our weekly unemployment filings to go down. But I don't want to talk about that number because it sounds extremely positive. So we're going to see the service sector offset travel and leisure, I think. And if we can get that come down a little bit, unemployment right now, they're pegging at 8.4%. That's not terrible. And it's certainly better than where we were and where we thought we'd be at the end of the year. If we could just hold steady, I think we'll be okay. And then the other thing, the next chart, Mallory, we're going to go to and talk a little bit about. This is the market this week. And you can see on the right-hand side, this was the close last night. And on the far right-hand side, I added this column 2020 year to date. And you can see generally worldwide, with the exception of Japan and Germany, which are pretty solid markets, there's some issues out there with the other broad markets. As far as Europe is concerned, Asia, they're still held down quite a bit. The U.S. market's down at the bottom. The Dow Industrial Average, I remember that's only 30 big stocks, 30 names that everybody knows. That's down a little bit versus the beginning of the year, but on average, over 30 years, that's really not a bad number. The NASDAQ is up 18.9% for the year. That looks better than it is based on the last couple of weeks. Technology's gotten hit pretty hard. So you can see that down 2.18% in the last 5 trading days. That's not great, but it's consistent with everybody else. So again, we're going to go back to that my comment on the original chart. We'll see what happens over the next week and see where we're headed. But our trend right now is kind of a trend, a little bit flipping over and going down. The one bright spot in all of this is amazing. The sales of existing homes rose 2.44% annualized to 6 million units. That's 10.5% above where we were a year ago. Right now, the average listing on a used home, an existing home for sale, is 22 days. I know someone that made an appointment to see a house. It was listed on Friday. They had an appointment Saturday morning. They got a call from the realtor Friday night, and they were telling them that they already had 2 contracts on the house before dinner on the day it was listed. So the existing home market is, I'm going to use the word robust. And what's helping that along are the interest rates. People are able to go and buy a home, whereas before they were out of the market. With interest rates now, you put all that together, what's called the front end ratio, which is the percentage of mortgage versus our gross income. When you have interest rates down at 2%, your front end ratio allows you to buy a little bit more house than you were maybe thinking you could. So a lot of people are upgrading and sliding up. That's just a really good number. And if we could get that new housing starts up and keep that at 1.2 long term, that's really good for the market. And so next, Mallory, this is our sector materials. I've chosen to talk about this today because we're reaching the end of the 3rd quarter. And I had a lot of questions the last 10, 12 days about what sector do I want to be in. And I don't want to show here, we have ours ratioed where we have so much information technology, and we adjust that about every 12 weeks. And the reason we adjust that is you see in the 1st quarter, the leaders were healthcare, information technology, and utilities. And those were all down, but they were down the least of everybody. In the 2nd quarter, the leaders were basic materials, energy, and information technology still leading. So if you try and guess the best performer, you're not going to win. And the third quarter, so far year to date, we've got a couple trading days to go. The leaders are basic materials, consumer services, and consumer goods. What's driving that? Well, to some extent, the housing market's driving that. To some extent, people are doing remodels on their homes and they're putting money into what they've already got. And so that's part of what's driving it. But then over on the right-hand side, you see 2020 year to date, consumer services, consumer staples, consumer goods, and information technology are leading the pack. Oddly, real estate is down. A lot of it comes from REITs, real estate investment trust, commercial, and that's being hammered by the commercial industry. Shopping malls are just getting brutalized right now. Strip malls, the same. And those also contain a huge piece, which are the restaurants, which own the land and lease it back. And that's got a lot to do with that decline. And then you've got energies and financials are also make up the three losers on 2020 year to date. Something I've always said, there's a couple things you will always have to have. You will always have to have energy. You will always have to have healthcare, and you always have to have some kind of financials. And the rest of these are kind of going to fluctuate, but the energies, the financials really aren't carrying their weight right now. So that's our sectors year to date. It's going to move around a little bit. I don't know if that'll change. I expect as we fly into the fourth quarter, we'll see some movement around, and you'll probably see some increase in energy. The financials are going to be burdened down because their interest rates are so low that gets their return low, what they call the spread. So they're doing a lot, but they're making less on it. And that's one of those three legs of business. You know, how do you increase your business? You sell more, you pay a higher price, or you make it for less. And the financials are they're moving a lot more money, but they're moving it at a smaller interest rate. So they're selling more, but they're selling it for less. So we'll see how that goes. The market will open up today. We're not expecting anything unusual. We will get on October 7th our formal FOMC report from their last meeting, September 15th. But again, to reiterate, what we expect to see is their prediction right now that we will see a relatively flat economy till 2024, which means that what we do from our office becomes even more important because it's not a fact that everything you pick is going to go up. It's a matter of managing assets wisely, managing risk wisely, and in what's called a lateral market, that becomes a very important issue. If you have any questions, please let us know. It's mmccauley@firstoptionbank.com. You can give us a call at 913-259-2110. Mallory is helping me today from a remote location. She's on vacation, but took time out to be here. So this is really awesome. She's about 150 miles away, and she's done an outstanding job as usual. So I really appreciate her being here to help. Thanks a lot. Have a great weekend. Stay cool. It's going to be 90 degrees tomorrow. We're going to have a little bit of summer. And before you know it, we'll see snow on the ground. It'll all work out. Have a great week. Thanks for joining us. Tell your friends. We're non-political, non-commercial, and we're here to answer any questions for anyone. Thanks for joining us. Have a great week.